Welcome to RealAg Live, everybody. I'm your host, Shaun Haney. Thanks a lot for tuning in today. Really do appreciate it. Like every RealAg Live, we are live. We are in person. This is not some recorded fake sort of presentation for you. We bring the guest in later so you can ask them questions. We're live throughout, and we encourage your Q&A. What we'd like you to do is enter your question or comment in the box, whether you're watching on Twitter, YouTube, or Facebook. Today we are talking markets, and we have Matthew Pott here from Grain Perspectives based out of Ontario. Hey, Matt, how are you?
I'm good, Shaun. How are you today?
Hey, man, I'm doing awesome. So, Matt, if I look at these markets today, kind of a mixed trade. If I look at May corn, finished up 4 3/4 to 5.54 1/4. Soybeans were up 3 3/4. We got spring wheat down 1, and canola down 7.6. Canola still canola trading just below 800 at 795.30. What a crazy market that has been. Okay, Matt, let's start with corn. What are your
Yeah.
thoughts here currently as we sit at 5.54 1/4, like I mentioned?
I mean, when you're looking at the corn market right now, so it's a lot about the spread action and whatever else. The USDA's. So here's the thing with corn, just to start off with exports. Today we had another sale of over 1 million metric tons to China announced, which confirms some of the rumors, and then we saw some initial selling after the fact, just sell the fact type of thing that we're seeing in these markets. And so when you look at the corn export pace, yes, it's on pace from an historical perspective, depending on the way that you do the calculations. But the reality of it is that we need to ship, on average, an amount that has only been done, I believe, in like 19 marketing years, over 19 weeks, over the last 10 years for the remaining of the marketing year. And so earlier this week, we had record inspections there for last week, or close to second highest, actually. November 1989, I believe, was higher than that. And actually, we have the second and third highest export inspections historically. And so there is some good news there, but the USDA is going to want to see that confirmed, right? And so right now, in my opinion, we're trading at a 1.5, but the market's probably closer, given the stocks to use right now, probably closer to a 1.3. Do we get there or do we not? And that's going to have implications to the new crop balance sheet down the road as well. And of course, you have other aspects that are pretty good. Ethanol production saw a pretty weak February here, a lot to do with the cold snap and the rising natural gas prices, but the margins are pretty healthy, and the same with crush margins right now, even for soybeans, after poor NOPA crush, for very similar arguments that you could say as far as February is concerned. And so when you look at the corn market right now, we're seeing this, in this week at least, it's very much a nearby demand rally for what we're seeing right now. I mean, not demand, we're not in a rally anymore, strength, support that we're seeing right now. So I think things become very interesting once we get on March 31st. That's a key date for the corn market, I feel, the quarterly stocks report as well as the prospective planting. And to me, I think the quarterly stocks will either give an idea of what the heck's happening with spreads in these markets or not. We'll see what the USDA does there.
Okay, so on the quarterly stocks report, what are you watching there? What's kind of the variables, the pieces that will sort of give you an indication what direction we're headed next?
I think I haven't really looked at the numbers close enough to give you exactly. Like, we're still 2 weeks away from that, of what I would be looking there for. But essentially, what we're looking for is that the disappearance is actually as high. And so what quarterly stocks give a good idea of basically feed and residual. And to me, the bigger question right now, especially after the big mess that the USDA made in the 2019 production that was just way off the mark, feed and residual for corn is very key. And so when it comes down to that, that can have implications. And so in June 2000, when the USDA reported quarterly stocks just completely off target, that had implications to the market, and the market adjusted. So I'm not sure what's going to happen there, but right now the market seems to be this could be the end of the USDA for all we know after being wrong for so much for 2 years, right? I'm
Yeah.
not sure if we're talking about it for too much longer, but the market seems to be doing what the market's doing. Spreads are pretty good, so
Yeah.
um, I'm ramping up for, when you look at the USDA's 1.5 for old crop and 1.552 at 92 million acres with the current demand estimates that they had. That's not their official. Their first balance sheet will come out in May, but if you look at that at 92 million, Shaun, if we lose a bushel an acre or a couple bushels an acre there, if below trend line, things get little tight. And so this is a different year than what we were in in 2019 and 2020, as far as what volatility could be on any stories as far as weather is concerned or planting
Well,
delays.
well, and then the people, the when you reference the acreage battle, 92 million acres of corn, there's still the possibility that people decide to plant more soybeans than originally was intended. So that we could still get that. Not never mind the yield number being lower, but the acres number could be lower too.
And at 90 million acres, like soybeans can't lose any very easily, right?
Yeah.
Unless China, see, there's obviously wild cards in there, unless China has huge African swine fever problem, which pushes down meal demand again, and those are variables that could come to play. But I believe the USDA has around 145 ending stocks, 145 million for new crop, and yeah. Um, the same type of thing. If you start losing a bushel an acre there, things get really tight. And we're not even talking, I don't even think we're on old crop for soybeans. We're not rationing enough right now as far as what I'm concerned. Nova crush was lower, below what the USDA's crush numbers are going to come in lower for that reason too. But it's below what the remainder of the marketing year. But a lot of that was due for the same reason that we saw ethanol declines. And so crush production has to actually decrease for the rest of the marketing year a little bit in order to have this balance sheet. So imports are going to matter.
So what are these spreads telling you? You look at corn. We've got July corn at 541 and three quarter. Deese is at 477 and three quarter. On soybeans, July beans are 1413 and three quarter, and November beans are at 1245. So a little bit healthier of a gap there on soybeans between old crop and new crop. What does that tell us, and how do we interpret it, and what do we do about it when it comes to our marketing?
Well, I mean, when you look at that, so those spreads have actually narrowed quite a bit, especially when you look at corn. I think we're only like 80-cent difference now
Yeah.
right now between old and new. And so when you're looking at those spreads, so when you're looking at soybeans, for instance, if we run out of old crop later in the marketing year and things get a little wild, the market's going to need those crush beans, and we're going to have to import it potentially if demand holds on, right? Exports need to slow down. We're 99% committed on the USDA estimate, and 87% of that has been shipped. So that's way above, I believe the 5 or 10 year average is like 74% of final exports by this time. And so a lot of that spread difference between the two is going to have to depend on your old crop demand as we move later into the marketing year and where that ends up. And of course, how big is this crop going to be for new crop, and what's the demand expectations for new crop a year out, right? Whether this year, essentially, Shaun, how much acres we put in the ground and what the weather stories are like will definitely have an implication between the two as far as what the spreads will be, right? Between the two marketing years, I think is what you're asking.
Yep.
Acres, it gets really interesting with weather events or stories here. And so from a producer standpoint, that's something to remember, is that, opportunities on stories, tighter stocks equal more volatility. I don't think there's much argument there. And that's going to be identical and alike for both new crop and old crop.
Okay, so what have you been telling clients, or what have you been hearing from clients in terms of their 21 crop year marketing? I think there was a story last week, and I forget which elevator it was, but they said historically at this point they would be 10% bought on new crop, but this year they're 25%. Are you hearing that kind of aggressive selling activity from farmers in Southwest Ontario?
It varies, right? One of my strategies with this whole thing is this whole rally that we saw, which was a little bit odd seasonally and kind of caught people a little bit off guard, and people started selling into that. There's some people, some farmers that I have heard of that are much higher sold than 25%, and there's some that are just waiting on. I think when it comes down to it, you don't want to get burnt here as far as what your inputs are concerned, because anything's possible. We don't know where these things can go. I mean, bullish markets, even though they don't last forever, right? And so make sure that you have your inputs covered at least, and make sure you locked in some margin there, because we may as well protect the risks that we can protect, right? Just be prepared for your spring weather stories, and make sure that you have some sort of plan. I mean, when you're in these markets, I don't think, Shaun, that these markets, as far as what I'm concerned right now, these markets are more reflective of fundamentals than any significant inflation at these current prices. So that's something else that we're going to have to watch really closely, is what happens with inflation in the long run. And that's going to make a difference between your input costs, which we're already seeing just based on the increase in commodity prices, right?
So what would you say to a client if they gave you a call this afternoon and said, Matt, I'm 0% sold on 21 new crop? What would you say to him?
I would have to ask him his financial situation and stuff, but I would say, I mean, Shaun, when it comes down to it, what I would say to producers like that are 0% sold, I mean, you've sat at this poker table for how long, and you haven't really cashed out of it, and you're sitting well ahead of everybody else right now. You can't, when you look at new crop prices, especially here in Ontario, like those are pretty strong prices. But I would hope if somebody's 0% sold, the other question would be, have they locked in any of their inputs? And I'm not sure if you're 0% sold, and if you've managed any risk on that side either, which can change a few things as well, right?
Especially on the 22 crop, as it applies to fertilizer purchases for sure. Before we move on to something else, I was thinking about that saying that Jim Cramer has on CNBC: bulls make money, bears make money, and pigs get slaughtered. And some of these prices, on fertilizer that was bought back in the fall, there's some money to be made. So yeah, it's to be 0% sold. And I had a farmer reach out to me last week that was so. It's a bit of you're betting big. There's big dollars out there right now, and it's what are you willing to risk, and your financial situation, I guess, would dictate your risk tolerance, I guess.
I see. You make sure you cover your inputs at least, or at least get up to, I don't know, where would you be, Shaun? 20% if you were zero?
I don't know. I think this is an incredibly difficult year to market your crop. I think what you just said about make sure you've got your inputs covered is not a bad place to be for sure. I think in last year's marketing year doesn't make this year's marketing year, but I think it does weigh on people. It plays on their mind. A lot of people sold a lot of their crop too early in hindsight. And so they're like, I'm not going to get burned this time. I'm not getting caught this time. And I think for some people, they're really sitting back and just waiting to see what develops. Because, hey, listen, there are people out there talking about $20 beans and giving the justification for that. So when people start to hear that, they're being a little bit cautious in how aggressive they are. What I have heard from some producers, Matt, is the strategy of I am incrementally selling continually, but I am selling in smaller batches. I am not taking as large a positions at a time. I'm really trying to measure it out so I give myself maybe a little bit more wiggle room and more opportunity throughout the season. So those are things that I've heard from the Real Agriculture audience over the past month.
One of the strategies that I have used with some of my clients that worked really well during this rally was selling the second down days, not the first one. And so if we get in the situation where we have spring, and now what that strategy has done is essentially when you get into these markets that are a little crazy, the second down days on like soybeans or whatever else were always followed by, or typically followed by more of a crash following that. And so at least we're incrementally selling higher on the way up. But there's no guarantee in what's going to happen when we get into spring. we haven't even, not a lot of people are talking about the perfect growing season. And so that never really happens, but what if, right? And
Yeah.
what if China runs into some problems? Important analog year that I always looked at for this was 2008, and it follows the rally that we've seen. In fact, we even saw pressure in March in 2008 before prices continued to go higher. And so I think we got up I don't have the chart in front of me, but it would be close to about $8 on corn by the summer high, right? And by harvest, we were below $4 in the threes again, right? So something to keep in mind is that these markets do come to an end at some point, and how inflation plays into that's going to be relative as well. But there's just so many flippant stories right now that it makes it hard to pull the trigger. I agree with you there, Shaun.
Yeah. So you've mentioned inflation a couple times, Matt. Can talk about why you keep on bringing up inflation as it applies to us talking about the commodity markets and trying to make good decisions on marketing our crop? Why are you bringing up inflation?
Well, when you look at like the amount of money that has been printed, the amount of government spending that we have seen, so one of the first indications of potential inflation is money begins to move into the equity markets, and money begins to move in the housing markets. And I don't know what the housing market's doing out in Alberta necessarily, but here in the GTA, we've seen increases of more than 5% in the month of January. And I haven't discussed February's numbers very closely, but probably very similar to that. Houses are going to $50,000 to $200,000 over asking.
Yep.
And that's with no conditions. Everything's just going. And so when you look at that, generally we start seeing that, and then we start seeing more money move into like your commodity values and your commodity prices, right? And so that you start seeing hoarding as well. And so even when you look at like China buying more corn or whatever else, how that ends up lining up. And China, they bought corn, record amount of more corn in any marketing year in 1 week a month and a half ago than they ever have done. And that was at 7 years highs, right? And so what does China know that we don't know? And so these are the things that are going to come to play as far as what inflation is concerned. The Federal Reserve and the Bank of Canada are very heavily downplaying inflation, saying that we're not going to raise rates until 2023. And the CPI readings, but they're not lining up necessarily to what we're actually seeing on the consumer level when you go to the grocery store or when you try to buy anything. I mean, when you look at lumber prices, house prices. And so eventually money potentially moves into commodities. And when that ends up happening, whether it's speculative or not, was one of the reasons that we saw this original bump in corn as far as I'm concerned, which probably moved it up to its fundamental level closer. But it's interesting, right, as the risks behind inflation. And so those are things that I'm not going to speculate on or try to determine on where those markets could go. The Federal Reserve is going to try to control that, and say alike with the Bank of Canada to some extent. But yeah, they're pretty relaxed as far as average inflation targeting and whatever else that can add some risks too. And so inflation, essentially, there's a lot of things lining up that says that something could end up giving, and we don't even know the worst of this pandemic yet. But we could also work through this and there could be nothing. And so I think it's a risk.
Well, so far
some may disagree, but I think it is.
Yeah, so far we've talked a lot about the domestic production side here in North America, but you referenced Chinese demand and questions about how long they sustain this kind of demand. What do they actually need? I guess only they really know. How confident are you that this demand from China continues for the next 12 to 24 months?
With corn, I don't. It's tough to say, right? Corn, it feels like who knows how much corn China's actually holding. I don't think anybody actually knows. I don't even know if China knows necessarily, right? But with soybeans, see, one thing with corn that I find so interesting is that China still has a lot to ship. The U.S. has a lot of corn to ship to China. It would account for about 1/3 of the unshipped corn right now. And so there's definitely risks if they end up canceling a contract or two later on, but they keep on buying anyways. And so when I look at that, I think China is looking at, my view on China is the potential that they're going to be looking at food security, and they want to potentially begin hoarding, which means that we can talk about African swine fever and whatever else all we want, but assuming no political interruptions happen, China is just going to follow the way that they they run their economy and probably feel like now is a good time to hold on to commodities to avoid these potential risks down the road.
Mm.
And so we'll see. But it's tough to say what they're going to end up doing with corn because Brazil's going to have corn available too. And where they're going to be for the new crop exports might be different than where they are right now for old crop and the demand. But we'll find out. But overall, this is a much different picture from China than what we saw previously.
You think back to a year ago, how different things were, right? Think back
Right.
to 18 months ago, when we were kind of in the first wave of ASF. There has been reports, Bloomberg and Reuters, talking about China really downplaying where their ASF infections are currently.
Right.
How do you sort of try to get through some of that noise and try to sort of
I
what
don't think there's
impact it
much.
could have?
I don't think there's much you can really do about that except look at numbers. It's kind of fishy that 2 weeks ago China's pork sales from the U.S. were, I think, 4 times normal previous weeks, and so there's some questions around that as well. And so we've seen some pressure on soybean meal recently, but we'll find out. I don't think when you look back and you ask those questions of China, and I don't mean to try and stir some pots here necessarily, but when it comes down to disease information, they're not necessarily the most community or transparent people, right? And so who knows
There's a bit of a record there.
there is, and so that's a tough answer to answer. But I think we're going to see more large farms produced in China to create their food, and I think you're going to see more protection that way down the road. I don't know what your thoughts on that are.
No idea. I watched with extreme interest. In 2019 that was such the story. 2020 obviously went on a bit of a back burner. COVID-19 obviously being a big part of that, and here we are in 2021, and we're starting to hear more about it. And I know there are some China experts that believe strongly that it's going to be a story in 2021 when we talk about ASF in China and Asia. South American crop. What have you heard there on what's coming out of South America?
Think that we're probably. I think we end up. It's just going to be musical chairs between, like, Argentina is probably going to be a little bit lower than what the USDA says, and Brazil it could be right where the USDA says. It's tough to say. There's some quality concerns there due to the late harvest and moisture potentially, but it's still going to be a large crop out of South America, right? And the second crop, corn, that's where things get interesting with this late harvest. We also have that corn season's moving a little bit later into potentially more drier weather periods, which can have some impact on the second crop corn, right? It's also going to be interesting to see, especially when you look at like Argentina. Like, one thing that's important with Argentina is that the ending stocks there are relatively fixed. In my opinion, they're a fixed value no matter what the production is for the most part. And a lot of that has to do with the producers' tendency to hold back crop as far as inflationary hedging is concerned. So Argentina is a focus, and that might actually mean something for meal down the road. We'll see.
Okay, and Argentina has like a 30% export tariff on their soybeans as well, right?
Yeah.
Yeah. Could you imagine that here? Like, just imagine, hey, we got a great idea. This is how we're going to pay for all the stimulus. We're going to put a 30% tax on grain exports. People would be in the streets. I don't know how some of that policy actually happens.
Could you imagine farming in a 30% inflationary environment?
Yeah. No.
Fertilizer's gone up, right?
Yeah, fertilizer's gone up enough, Matt. We don't need any more encouragement.
It's a never-ending race when you're trying to figure out when to sell your commodities, and then you're figuring out when to buy your inputs simultaneously in order to manage that cash flow. It's an interesting scenario that the Argentina farmer deals with.
Yeah. Do you have any comments on what you think are going to happen with rates? You mentioned the Federal Reserve. They're meeting here today and tomorrow. Everybody watching that commentary very, very closely. Do you think they're going to provide any sort of indication on what they're going to do going forward here?
I would ask the question, why would they? What's the benefit for that? Everybody thinks, see, here's the thing. Just like an agronomist, when you're trying to figure out when you want to put on fertilizer or different pesticides or herbicides, timing is everything. Too late, too early, and its effectiveness is not the same. And so when you look at the Federal Reserve, we're already seeing the Federal Reserve has held their mouth pretty shut for the most part. And we've already seen money move into bond yields, right? And I guess one concern that I would have if I were the Federal Reserve right now after watching that, I mean, we're at a 1.5% 10-year bond yield and just a small increase at that, which is pretty close to zero still in the big picture. Added a little bit of fear in the equity markets. And so there's a lot of turbulence in these markets right now that are pretty scary. And so it's one of these things that if the Federal Reserve says nothing, that's going to potentially be impactful. And if they say a lot, that's going to be impactful, right? So if you're the Federal Reserve, Shaun, and you're looking at these potential markets, do you deal with what you know and just keep your mouth shut on what you plan to do, afraid that the markets are going to respond to that? I mean, if yields start rising too much here before interest rates in the Federal Reserve, like that could create some very interesting scenarios for what this equity market's going to do.
So is it their job though to worry about that, or is it their job to provide good monetary policy and guidance? And the markets will, the markets will do what markets are going to do, or do they actually have to take the reaction into consideration on what their tone and what some of the words are that they use?
I don't know what I've never really applied for a Federal Reserve job yet, and so I don't.
Me neither. I'm waiting for the right one to pop up.
I don't know, but you have to ask yourself, like, the one thing that the market always, especially when it comes down to rates, the market's going to work itself up to where it expects rates to go, right? And that becomes very interesting if you prematurely hint that rates are going to go higher sooner than what they previously were expected, and what that can actually mean to bond yields and what that can mean to borrowing costs. So in a sense, if you open your mouth too early, you could be damaging the exact things that you're trying to control. Whether you agree with what the Federal Reserve has done or not, as far as what quantitative easing is concerned, you also have that giant 1.9 trillion stimulus that's going to have to be financed. And so the Federal Reserve's, I don't know if they're going to really change much tomorrow. If they do, they do, and then we change our expectations accordingly. I think in a longer run, it's going to come out in the wash, and it's a lot to I look at the Federal Reserve very similar to what the USDA does. It's just a view in numbers, right? As far as what the tone's concerned, and so you're just trying to analyze when they're going to do that. And so when you look at the Federal Reserve, eventually they're going to have to taper back. I mean, the amount of money that they're printing is it's alarming, right?
Well, Matt, hey, this has been a great discussion. Really appreciate it. If somebody wants more information on some of your marketing services, a great market newsletter you put out with some awesome graphics, how do they find you?
You can email me at matt@grainperspectives.com or www.grainperspectives.com.
Perfect stuff. Hey, great chatting with you, Matt. Really appreciate it.
Thanks, Shaun. Have a good day.
Okay, everybody. Hey, thanks a lot for tuning in today. Great stuff there with Matthew Pott. What do I encourage everybody to do is check out RealAg Radio today on Rural Radio 147. Today's show sponsor, we're going to have virtual on location going on. We've got Syngenta Canada as our sponsor, Elatis Fungicide. So some great guests. JP Gervais talking about land values, the report they put out yesterday. Land values up 5.4% across the country, so he'll explain that number. We've also got Brian Innes talking about his new role at Soy Canada. Thanks for getting real and getting connected with RealAg Live, and we'll talk to you again tomorrow. Cheers, everybody.